Ever wondered what's currently happening in the stock market? Well, let's dive right in. The financial seas are a bit rough these days, with the Federal Reserve hiking up interest rates and inflation making its mark on the economy. This challenging market environment is reshaping the investment landscape. Speculative tech stocks, which once soared high in the market skies, are now experiencing a significant descent. This decline has sparked a change in investment behavior, with a noticeable shift towards more cautious and research-driven investing. It's less about quick gains now, and more about strategic, well-thought-out decisions. But here's the thing. Despite these turbulent times, experts are leaning towards the belief that we're in the throes of what could be considered a normal bear market, not teetering on the edge of a crash. This means that while the market may be growling now, it's not necessarily indicative of a complete financial meltdown. So despite the turbulence, long-term wealth can still be built in the stock market with a strategic approach. It's about navigating these choppy waters with a steady hand and a sharp eye, focusing on quality companies and diversifying portfolios. It's not the easiest of times, but with the right strategy, it's still possible to find a path to success in the stock market. What's the impact of the current market situation on tech stocks, you ask? Well, let's dive right in. The significant decline in the stock market has particularly affected tech stocks. Giants like Meta and Amazon have taken a hit, and the reasons are twofold. Firstly, investors are anticipating higher interest rates from the Federal Reserve to combat inflation. This anticipation has led to a ripple effect, causing a downturn in the stock market. Secondly, tech stocks have traditionally carried high valuations, often based on future profit expectations. When the market gets shaky, these valuations can seem overly optimistic, and stocks take a tumble. Now, with such a significant drop, the word recession starts to echo in the hallways. It's a scary word, no doubt. It signals economic decline, job losses, and overall uncertainty. However, let's not get ahead of ourselves. Remember, the stock market is not the economy. It's a part of it, yes, but it's not the whole picture. Yet, despite these concerns, there is optimism that the bear market may be nearing its end. So, what's the future outlook for the stock market? As we navigate these uncertain times, it's crucial to keep our eyes on the horizon. An economic recovery is not just a possibility, but a potential reality. This optimism is fueled by several factors. First, we're seeing a decrease in inflation, a phenomenon that has been putting a significant strain on our economy. This reduction could potentially lead to increased purchasing power for consumers, stimulating economic growth. Secondly, we're witnessing falling oil prices. With oil being a primary input in various industries, lower prices could translate into cheaper production costs, potentially boosting profitability for businesses and, in turn, their stock prices. Thirdly, global supply chains are improving. After the disruptions caused by the pandemic, this improvement could mean smoother operations for businesses and increased availability of goods for consumers. However, with the Federal Reserve potentially hiking interest rates, it's advised to hold off on making any hasty investment decisions. Let's wait for some clarity on this front. In the grand scheme of things, the long-term outlook for the American economy and the stock market remains positive. This isn't a time for panic, but for strategic and well-informed investing. Remember, the key is to diversify your portfolio and focus on quality companies. In conclusion, while the market may be turbulent now, the long-term outlook remains positive. Strategic and informed investing can still lead to substantial gains.